all came from. The dreams we had, the love we shared. This is what we're waiting for. And in my mind, in my head, this is where we all came from. The dreams we had, the love we shared. This is what we're waiting for. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all came from. The dreams we had, the love we shared. This is what we're waiting for.
What is going on YouTube? It's Brendan from Market Makers. Why do we trade? Simple answer. To make money, to have optionality in your life and live your best life. Nobody wants to be in a corporate rat hole, stuck in a cubicle. Guys, it took me 20 years to get there. Some of you guys will have the ability to get there in a year or two. These markets are awesome to trade. You can profit in these markets. That's why I have this channel, to help as many of you as possible find financial freedom, create some other sources of income in your life, because things are going to get very difficult coming very soon. Did you guys see the new GDP number? The preliminary number is expected to be above 2%. It came in at 1.1, almost a 50% decline. This is huge. The recession is at your doorstep. As you guys know, I've been predicting this for the summer, and we're going to go over some key metrics, go over our trade setups, go over the price action. We hit our pivot, guys, April 14th, and that was within $10 of the local high, then a $125 drop in the S&P. It was also the high in Bitcoin, within $1 on gold for the high, and it may have been the actual high on silver as well. I actually didn't check that one. Guys, if you want to trade, if you want to check out these markets, let SimpleFX or BingX pay for your first month's membership on our Discord. Those links are in the video description. SimpleFX is a decentralized Forex exchange where you can trade equities, commodities, and yes, the individual stocks as well. Forex, and of course, some cryptos. And if you want a traditional crypto exchange, guys, then check out BingX. Both those links are in the video description. It helps support this channel. It brings you this program. Like and subscribe. As always, we are pushing onwards and upwards to 30,000 subs and the Market Maker Militia. Really appreciate your guys' support. All right, guys. So preliminary reading on GDP is down almost 50%. That is bad. So of course the market's rallying on the GDP. Why? Because remember, the bullish narrative, it's a chameleon. It changes all the time. Yes, the economy is getting destroyed, so maybe now the Fed will pause. Buy the effing dip, BTFD. That's what's happening in the marketplace. Remember, we have record-breaking shorts from hedge funds on the S&P. We have the market overall in decline, with less than 46% of the stocks, the individual companies, above their 200-day moving average. And guys, I want to play a quick video. It's a minute long. There's yet another indicator without fail, a single data point that tells you a recession is at your doorstep. We're going to play this. Watch this data point, guys. We'll talk about it on the other side. Lee, run it.
As the debate over if or when we might hit a recession continues, my next guest says look no further than one data point for the answer: continuing claims. They're up 22% year on year, flashing a signal only seen during or just prior to recessions. I'm pleased to be joined now by Michael Darda, chief economist and market strategist at Roth Chemca, and the dog. I always have to mention. Mike, good to see you again. Welcome.
Good to see you. Thanks for having me.
The data is so consistent that I don't really understand why the market doesn't care. Any thoughts about that?
Yeah, I mean, it could just be that, people have been talking about a downturn for a long time. I think we all have some sense of fatigue, even myself. But it's hard to escape the message of some of these numbers. Jobless claims are a leading indicator, but a much more near-term leading indicator. The yield curve, monetary growth, residential real estate, leading indicators, but long horizon indicators. Jobless claims tend to inflect just right before recessions, usually with a heads up of only a couple months on average, if that. And what we're seeing from continuing claims, as you noted, up 22.1% year over year in the weekly data set, totally unprecedented outside of recessions or just prior to a recession taking place.
Continuous claims, my friends, 22% year over year, unprecedented in the analysts' words, unprecedented unless you're in a recession or a recession is a month or two away. And looking at the GDP, looking at the continuous claims, looking at the overall economic environment, looking at First Republic, which is yet another bank that looks like it's going to fail. Guys, it's right at your doorstep. So understand the market environment you're trading in. You're trading in an environment of decay and a bubble cycle, and the bubble is bursting. Okay. Let's go over our trade setups. Let's go over some key areas. As you guys see on my screen, the April 14th pivot, boom, 125-point drop, getting that nice little rebound. I told you last video, looking at this, looking like we're printing a distribution box, right? Key Wyckoff concept here. Let's go ahead and just Wyckoff this thing up for you on the S&P so we can see. S&P, get our buying climax, and then get our reaction candle, okay? And you can see what you did. You waved up, got some up thrust, waved back down, got down thrust, and so now you're having a reaction to your down thrust. But overall, what does it look like you're printing? You're printing potentially a double top. So for me, guys, this area of trading remains the exact same, okay? 41.43, 41.73, going back all the way to summer of last year, provided you awesome entries for shorting this market in this bubble cycle, okay? The only time we got above it was that rally here in August, which gives us our upside risk. Let's go to the next chart. Upside risk of 42.89 at the 1618, but you can see our 45 angle here on the S&P. Look at this. You're about to hit it, okay? You're at your 45 angle. So if we do come back up, I'm looking at the exact same trading range once again, giving us a high probability here for more decline because I think you're coming up to print a double top. This is exactly what you did last distribution box. You see that? You did the exact same move last distribution box. The market moves in patterns, guys. Let's look at our indicators here, and we're going to go through this video quickly so I don't keep you guys tied up. Again, 46% of the S&P is above the 200-day moving average. So less than half the stocks are above the 200-day moving average. Markets being held up by what? The big pumpers, the pampers, such as Meta, which was up 10% at one point. Microsoft was up 7 or 8% yesterday, another 2 or 3% today. That's what's holding the market up. You're basically at your median line on money flow. Your buying volume is declining, and your amount of stocks above the 200 is declining, okay? We have the Fed next week as well. If they pause, guys, that could cause some type of rally. Though there could be a run up before the Fed. But key thing is I anticipate much further and deeper decline towards that June 14th pivot for our next bottom. And remember, the market dumps 5 to 7 times faster than the market rises. Keep that in mind. So same exact trading range for me as you watch the S&P try to rebound up 41.43 to 41.73. The VIX is dropping back down towards your all-time high level again of 16.34. Again, guys, 16.17. This has been your bear market tops going back a quarter century in a bear market. And yes, we're in a bear market. When you have 1% GDP, 1%, when you have 22% continuous claims coming in year over year, the recession is at your doorstep. Be aware of that because you're not going to hear that on TV because it's always a new bullish narrative to keep your money trapped in the marketplace. Everybody is against you guys. When you are a day trader, swing trader, whatever moniker you want to put on your name, everybody is against you. That is why the Wyckoff method exists, to teach you how money flows through the market, to teach you how they manipulate the marketplace against you to steal and rob from you. So let's look at the Bitcoin here, Bitcoin here on the weekly time frame. We had our big selling bar, trying to get a rebound here. Again, looking for that Bitcoin move down with the equities, down to high 12s, low 13s for that next move, which is mid-June. Let's look at this on the daily. On the daily, same concept, guys. It looks like it's printing up for double top. Let's look at this a couple different ways. Let's get an impulsive move here with my trend-based fib. This is a fib wave, guys. 1272 was struck, absolutely gorgeous. 30,962 fell back down. Let's see what we have here for projection. Let's get a fib retracement. Do it off of our impulse as well. And we hit our impulses here. We hit our one fib at 27,190. You see that? And look at where your 486 is. You're just getting wicks above it back to the upside. So let's measure it from the upside. This is like a fib session here. Measure it from the upside here of this move. And you can see we hit the 618 at 20,975. So, again, guys, I look at this with impulsive moves down. So I'm looking at this selling candle. And if I look at this, the 1272 is at 31,340. That's basically that same upside risk range that I gave you before. Obviously, the 168 would be slightly higher. I don't anticipate Bitcoin getting that high. I'm looking for lower high structures. When I typically look at lower high structures, now Bitcoin's much more volatile than equities, obviously, but I like to look at the 786 fibs. So whether you want to use extremes here, your 786 is at 30,163. If I was interested in doing a trade on Bitcoin, again, looking at the structure here, potential double top structure, right? You want to see the resistance hold at 30,000, roughly 30,163, which obviously so far it's holding here. And then you want to see it start to move, right? So that's a Bitcoin setup. But you really, guys, the next few days is going to be key with what happens with Powell, with what happens with the market. If Powell announces they're pausing because the GDP is collapsing, well, again, that could spur the market up. So you want to look at some of these upside targets when you're trading, okay? Looking at the NASDAQ, guys. NASDAQ, again, the high probability trading range has been 13,198 here and here, give you a decline and a decline. Now we're pumping back up at 13,096 at the time of this recording. But guys, again, if we have a further rally, right? Big tech, people like, even though the earnings are revised down, they're beating the revised down earnings, but you don't hear that on the media. They just say earnings beat. Yeah, the earnings have been revised down, but it's an earnings beat. So this is what you're dealing with. So 13,198 is an interesting area if it holds, and the upside risk is 13,417, which is achievable, especially if the Fed is dovish because of the indicators telling you the recession is coming. Okay, so I'm watching 13.2 on the Nasdaq, and then above that 13.4. Let's see what our indicators here are doing. Money flow is still bearish. Look at your buying volume. It's heavily in the selling camp now. Your amount of stocks, keep in mind, it's just the Nasdaq 100, but the amount of stocks above the 200 has dropped to 58%. It was up here at 74%. So everything's dropping. The few big stocks are holding up the marketplace. Okay. So the rallies are all rallies to fade here in the markets. Looking at the DAX, I'm in a short on this. Look at this target, guys. The target I gave you got struck beautifully, 15,974, multiple candles, sell off, just like all the other indices, getting a rebound back up. And you're basically looking at, once again, at printing what's going to be some type of double top structure. And then hopefully that double top structure will break. And I say hopefully because I'm in a short. Okay. So let's look at this. Let's just pull a fib retracement here. DAX at 15,926 is a 786. I really like 786 for retracements for double tops. So that's what I'd be looking at here on the DAX if I'm looking to re-enter. And we almost got up there. Again, the next couple of days, we'll see if we get this rally continues. Well, I guess it'll be Friday, and then we have the Fed. So you could have a run up before the Fed, or it could sell off. But if it does come back up, I'm looking at 15,926. Interested in this area if it holds to potentially add to my existing position. Key area of support 15,733. You almost struck it just beneath you. Okay, so we've had a nice move down off the DAX top down to the DAX low. couple hundred points, and we'll see if this just rebounds to a lower high to give us our traditional Gartley pattern / double top. French 40, guys, nailed this with the one fib at 75.95 on our projection. And now I have the retracement here, but you can see that the CAC, the French 40 is doing the exact same move. See, they're all trying to come back up. This is a weaker move, right? Because you had a nice sell off. The French 40 made an all-time high. We traded this in a Discord, shared this as well on YouTube. And guys, you can see the pump up here hit the 46 at 75.10. But again, I would be looking at 75.59 if this does come back up and start to fail. That's the area I like, the 786, 75.59. And of course, do this whatever method you feel is best if you like the 618 or other fibs as well. Looking at the ASX 200. All right, Australia. Australia is our third largest viewing country, and this was requested. I went ahead on the 3-day chart, guys. And again, this is the 8 cap. I just threw this on. I don't know if this is priced. Yeah, I think it's priced in Australian dollars. But looking at this, you're buying climax, you're selling climax. You can go back in the chart and see how many Wyckoffs you've made. Here's your attempt to do a Livermore pivot, which would mean you would have to base and come up. Obviously, that failed. Now you have down thrust, and now you came back up. So let's just get a Fib measurement here. Looking at this, the way the international indices will work, guys, based on previous bubble patterns. The largest market, obviously, is the U.S., the S&P 500. What you will have is when the S&P pulls down, the other indices will pull down in sympathy. Some will pull down dramatically. Some won't pull down as much, but they will all in general, okay? Don't show me some Singapore index or something. I'm talking about the larger cap countries here, but they will all in general pull down together, okay? Now, not day for day or candle for candle, but just as an example, I talk about all the time, the DAX, the German 40, went down 74% in Y2K, okay? 74%. So, and whereas the S&P only went down 50%. So this is what you have to understand when you're looking at the markets. But let's go ahead and get a fib on here as well. And we can go ahead and get our fib here, and you can see your 786 on this impulsive move down to the low is lined up perfectly with your Wyckoff at 73.86, and that's what you struck and came back down. So looking at the 3-day chart, this is the shape that you're starting to print. All of the indices are doing this, okay? They're all trying to rebound, and you want to see if this area holds, and if it does, 73.86, you're making a double top again, okay? Then your upside risk would be 75.38. So if this area holds, then look at this structure if you're interested in trading this. And of course, to flip this, you got to come back up and do a Livermore pivot and then break out to the upside, which I don't anticipate that happening if the other markets do begin to roll. I'd be looking for this potential entry here around 73.86, 7400 would be a great potential entry. And I guess if you want to look at the downside real quick, guys, of where this would go, you can look at your immediate fib level below you, which is 71.72. And we can also just do a smaller move retracement or a larger move retracement, but let's do this smaller move. And your key level here you want to watch after you get through the 71s areas is 7,045, which is basically your base of your Wyckoff as well. And then you have the one fib at 68.25. Okay, those are your key levels to watch on the Aussie index. And let's go ahead and look at Ethereum. Ethereum, same thing, impulsive move we've measured here. Ethereum bounced up above the 486 at 1938. And I wouldn't be interested in doing anything with Ethereum unless we came up more towards 2035, meaning this type of move, okay? That's the type of move I'd be looking for. If Ethereum can come up and do that, I would be more interested in it. But let's look at a downside projection as well. Go ahead and get this impulsive move up. And we can see here we hit our 786 at 1795, and just on the flip side, struggling back at that 1929 range, okay? So you'd want to watch that 1700 more to the downside, and then watch your 1578, and then obviously 1424, which puts you back down in this low from March, okay? That would be your immediate targets if this thing just started rolling over, but I'd be looking for a pump pump up a little bit higher if you're interested in trading Ethereum. And let's look at Tesla. This trade has been cooking with Crisco. We had the entry here at 208, shared this with you guys as well as posted in the room. We got all the way down to 152, an awesome trade, guys. And Tesla's trying to hold here. It's stuck below the 161 level. Price is currently 158. Looking for Tesla to sweep its low here at 101 by mid-June and come down to a new low somewhere between, let's say, $70 and $85. That's what I'm looking for when the markets actually roll down. And let's go ahead and look at NVIDIA. This has been an awesome trading opportunity. This is a daily chart. So you look at this on a 8-hour, 4-hour chart, you can see a lot more opportunities here. Been trading in and out of NVIDIA myself, and in the room, lots of our members have. Guys, 279 has been a key range here in NVIDIA. You've hit it multiple times on the daily chart, had some nice retracements off of 279, and now we're just kind of in that middle range. So I'll wait and see if we rally back up to 279 or if you do start to capitulate. Once you lose 263 and start hitting your head on it, then you're looking at your next leg down if that holds as resistance. Because as you can see, this is basically between the two fibs is a Wyckoff range. You see that? So that's what you want to watch on NVIDIA. And your downside targets, if you lose 263, it'd be 254, and of course the 618 at 247.87, your immediate targets. Let's look at MSTR, moving with Bitcoin, 3-day chart, MicroStrategies, Michael Saylor's company. And again, on the 3-day chart, this just looks like you're printing a double top. So guys, it's the same method over and over again. But if we do get some type of rally, because we almost got back up to our entry, looking at 333 to 3 with upside risk to 360, okay? And this is where we had a nice trade on here. We got to 347, shared this with you guys as well, obviously, and the low was 280. So really nice move here. And what is that, 50, 67, $65 on a drop here if you were able to catch that peak. And so it looks like we're just coming up for a double top. I would watch that same level, 333. Interesting opportunity. And of course, it correlates with Bitcoin. So watch Bitcoin. Your next level down would be your 228. And then you're looking at your 180. And of course, looking for MSTR to sweep its low and come down to 102 by mid-June. Let's look at First Solar. Another great trade I share with you guys. That 217 range has been key. Come on, load. 217 and multiple entries here at 217 opportunities, I should say, guys. And we got all the way down below $200 here on First Solar. You're clearly in a distribution top. You're in the lower end range of that distribution top. I don't anticipate First Solar coming back up, but if it does, it is a potential opportunity to catch this on another drop. What you're looking for First Solar to do at this point, if you're in this trade, is lose 196. Lose 196, hit your head on the bottom of Wyckoff, and then start to decline. And then you're watching 181 as your next key level down, okay? You want to see that roll and lose it and get there. And let's go ahead and bounce over to gold. Gold, yeah, again, within $1 on our April 14th pivot of the high. Looking at gold, guys, we're not overbought on gold, as you guys know. So waiting for that opportunity to see if we do get overbought. This is going to depend on the Fed. You know, what is Powell doing? Is he raising rates? Is he pausing? You're going to see gold react one way or the other. If it does react, I'm still like a hawk watching 2055, looking for these 20% drops that we get when we get up to 2055 and we are overbought in the 3-day chart. That's the key. That's the key thing to watch here as well for correlation, okay? You have to be overbought. You have to be overbought to get these drops. So this is what we want to watch and see if we get up there at 2055. And then really it's just a moral choice for you because we all love metals. So if you don't want to trade gold, then do not trade gold. You can wait and see if it holds 2055. I anticipate it, as you guys know, dropping. Several months ago, I released a gold and silver video going over the GFC crash cycle. I have gold going down 32% at most, okay, at most. Looking for it, the first test, 1626, which is its low. And if it starts falling apart, 1521, 1389, 32% decline. It went down 34% in the GFC, which this would be an awesome place to add to gold and to trade potentially a long, which I will be doing both if we do come down to that target. Silver, guys, same situation. Silver moves with gold. It's not super overbought. It just barely got rejected at being overbought. I want to see it get much more overbought, like these these pattern failures here on the candles. They get these nice moves down. Silver went down 61% in the GFC cycle. So I'm looking for silver to come down substantially if we can get up, I really like that 26.99. Okay, basically $27 with whatever the Fed does. If the metal market likes it or at least induces some type of rally, and we can get up to 26.99, that will make this probably way oversold or way overbought, just like this. Okay, way overbought. The volume here is still bearish, but it's way overbought at that point, and I think we're going to get a really nice decline in silver if that happens. Okay, again, we shall see. Guys, I hope you enjoyed this video. Again, please do like and subscribe and support my work, support this channel, check out our exchanges, join our room, guys. It is free. The exchanges will pay for it for your first month. It will be free anyways, and you get a handful of free indicators. Next video coming out soon, guys. Take a look for it, and I'll talk to everybody. Leave me your comments and questions in the YouTube comments, or come have a dialogue with me on the Discord. Talk to you guys soon. Appreciate it. Thanks, guys.